for this closing on Friday. Okay, so US market will be the monthly closing for the trade we're looking at later on. So before that, let me share with you one of the email I have received, the expiration of this festival. Okay, so they'll inform you you'll receive this email. Basically, it will be notified you have your options which is will be expired on the week, which is today of last day. You need to close your position. Okay, if not, so basically it will tell you your account can be exercised or be assigned. Okay, if you're doing a selling a put, okay, your job is to obligation is to buy the stock. If let's say the stock is in the money, okay, which is in a seller, will be in the money. Okay, if you're out of the money, of course you the stock will be expire worthless. But in the event that if you have the stock in the money, so you need to take action. Okay, either you need to repair or you take losses to close it, or then if you are not taking action, the team of testy work, basically they will help you to close your account. Okay, so now it's 10:30. So before we going to do that, so this is the red notification. To note, you need to log into the testy work, okay, to manage your account, and then you need to click on I'm monitoring, so that they will not touch your account, so that they've been notified. Okay, so this is the pages which is I come into my testy work, and you can see the expiration read monitoring, right? So you need to click this button, and then of course you just click agree and submit to them, so to tell them that basically you are monitoring your account. All right, so basically what we want to address for today, it's how to take profit, okay, on the account that you have trade. So basically we already traded on code, okay, and once you click on the code, today is 0 date, which is today will be the expiration. How you going to take profit? Okay, basically right now our stock, okay, it's will be expire worthless, and it's quite far away from the trade. Okay, it's quite far away on the trade, which is, okay, let me draw a line. This is our strike price, okay, and the stock right now, okay, the stock right now is there above 47.50. Okay, it's there above $50.50. Okay, so right now we do have a lot of safety margin, about $2, probably $3 of safety margin for code. Okay, so in this case, you have two options to take action. Number one, you can leave it worthless automatic close on the Saturday, which is the next day. Then the system will help you to close your position. Okay, so what position is, because you are selling a put at the 47, okay, and you're also buying a put, right? Remember we pay premium to the put, which is the insurance. But since this stock, we feel that the chances to drop today to 47, unlikely it will drop to this position. Okay, it's because the safety margin we have is very huge. So what action, probably what I don't take action on coke. Okay, I don't take action for coke. It's because I have a lot of safety margin, so I want it to be automatic worthless, and it will be calculated by itself on the next day, okay, by testable. So because if I do take any action today, okay, let me clear this up. Let me do if I close this action today, if let's say I want to close, so I will close only the the selling put, which is the 47.50 cent. Okay, so when I just click on this, okay, so this line highlighted, and then you close position, okay, and then select close position, and it will pop up, okay, it will pop up this message. It will tell you you can buy it to close, okay, you can buy to close your position, which is you still need to pay a fee of 14 cents over here. Okay, you still need to pay a 14 cents if you want to take action to close this position now. All right, so due to this 14 cents, I want to save this 14 cents, and I don't want to let this I don't want to let them earn, okay, to take my 14 cents. Because if I want to close now, you still need to pay $1, okay, $1 to close this position, plus again 14 cents. So total it will be deduct $1.14 from your profit. Okay, so which is I don't want to do that, okay, for the Coke, because I have confident that Coke will not drop, okay, 47.50 cents, which is I have $3 safety margins over here, okay, which is a huge margin. So I don't take any action. I will let this position to close automatic by today. Okay, then the next one, we are still looking at also Palantir. Okay, so Palantir, what I'm looking at right now, okay, we need to take action to close this position, because it's only about $1 away from the market. Okay, we only have $1 market right now. So let's say this is our position, which is $26. So right now, okay, right now the stock at this area, and this stock to drop, okay, beyond to 26, the chances is considered quite high, okay, because the safety margin is only $1, and I want to close this position because Palantir, what we take this Palantir, actually it's a very high volatile stocks. Let me share with you how volatile this market is. Okay, how volatile. So now I'm at the Palantir, and then this is my the option chain, and the percentage of the movement right now, it's about the implied volatility is 320, which is you compare to other day, it's only about 130. It's still very volatile stock, okay, for Palantir. So I don't want to take the risk. So I want to close this position so that I can lock down my profit. So what should I do? So if I want to lock this position, I hope that I only close one position, which is only the negative one, which is the selling put. So right now I will right click, close position, and I will buy, okay, I will buy this position about 22 cents. It's still considered a very high price to buy back this position, okay. It's because this right now is very volatile. The implied volatile is very high, okay. So what I want to do is I don't want to take risk, okay. I want to close this position as soon as I can, okay. So what I did is I want to try to put it to close by 20 cents, okay. I want to try to close by 20 cents, okay, so that I earn less compare rather than if I just lose everything. Okay, let me share with you. So Palantir, we are entering at 26th of January. Okay, so we are pocketed the premium, which is 22 cents. Okay, right now it's 22 cents. If we close this position right now, we need to pay 20 cents in order to break even. It just break even for this trade. Okay, so yeah, right now the stock will be continue increasing, going up. So is now we have about $1.50 safety margin, but yet this is very volatile. So we want to quit as soon as possible. So we try to close this position. Let me, yeah, I don't want to take the risk. We want just to exit this stock as soon as possible. Okay, let's take this to close at maybe at 10 cent. Okay, so we try to close it 10 cent and cent. Okay, so what we can see right now under position, and okay, so the stock is continue to, okay, if you want to close immediately, right, so you need to pay 15 cents, but I want to try to close as low as I can so that I can profit $10. Okay, so yeah, okay, it dropped below our strike price. Okay, let me draw this to you. So the first is 22 and 50 cents. Okay, so this is the first one. Okay, the first one. Now it's already, now the market have dropped. Okay, okay, good. So you see our Palantir have been filled. Okay, so Palantir position have been filled. So means that, okay, Palantir have a good profit of $10. Okay, so right now we are looking at the VLDR. Okay, VLDR. Now we look at VLDR. Okay, so okay, so this is the red one. So this is the 20. Okay, so the gap in between the strike is $2.50. Okay, so what our break even price? Okay, our break even price. Break even price is $22 minus what the premium we have collected. Okay, the premium we have collected previously when we do this trade, the premium collected is 84 cents. So we minus 84 cents. Okay, so now you can see now what's our break even price. Our break even price actually at 21.66 cents. Okay, as long as the stock, okay, right now if the stock already dropped beyond the break even price, if the stock stay above 21.60 cents today, we are break even for VLDR. But unfortunately, okay, the stock have been dropped beyond this zone, this area. Okay, so it already dropped this area, so that we have completely lost, okay, have a losses of $1. Okay, so $1 additional $1 because the stock right now, okay, at this level, okay, so 21.66 and come to 20.54 cents. So there is another $1.10 of a difference. So that could be a losses for this trade. Okay, so let me clear all. Okay, so what action probably we will take? Okay, what action we will take? So there is two okay, action we can consider over here. Okay, so if you still think VLDR will be continue to drop, okay, will be continue to drop. okay, then the action is very simple. So we will only close the selling a put, okay, selling the put, and we will keep remaining open on the buy put, okay. So because the buy put, we want the stock going down. If we remaining on the buy put, the stock continue, okay, let's say I'm doing this. So this is the buying put. So buying put, basically we want the stock going down, okay, want to stop going down. If today this stock will be going beyond 20, so this, okay, this leg basically will be making money, okay. So in this particular action, you just need to do close this to take losses, and you hope, you pray this stock might drop beyond 20, so we still can be able to capture some profit over here. But this unlikely, right? So unlikely it can be happen because we only left less than 8 hours of trading time. So is it possible to drop? I don't think so. Okay, I don't think so. So what the best strategy we can use over here? Okay, in order not to lose, okay, and we can try to bet again, okay, the situation. We try to bet again the situation. So what we can do is, okay, so click on two. When you right click, okay, so you have to close it if you want, but when you close it, you need to pay additional 1.72, okay. So when we close it, you need to pay 1.72, which is, this is the losses, okay. But now I don't want to take the losses, and I want to repair this position. So I just select on both. What I need to do, I can do a row, okay. So I think this stock might continue, okay, to go up, okay. If I think the stock will continue to go up, so I give this stock to have more time, okay, to have more time to grow, okay. I want to give this stock this position to rule. So what can I do? Let me try. Try to go down. So this is a new function on the Destiwork. So what I can do is we click and then we roll the expiration to another which is another 28 day. Okay, if you want to roll another 28 day, so you are debiting, okay, so you are taking losses of additional 12 cents rather than you take 170, okay, right now if you close the position, okay. So the Palantir, which is interesting, and it have start to bounce back again. So we try to enter again in the March of 19. So we want to go out to another 28 day of the Palantir. Okay. So same things what we are looking at. We are looking at to trade safely. Okay, we want to trade safely. So we're going out to put 21, okay, 21, and click on the control key, select the second option, which is 20 and 21, okay. So we got the premium to collect here, it's about 20 cents. So what's the revenue, okay, what is the ROI we are collected over here? It's 20 divided to 80. So the percentage, the ROI for 28 day actually is about 25%, which is not bad, okay, not bad. So usually what the trade we are looking at is 15% and above. So this trade will giving us 25%. So I think to me, I will go this trade, okay, for the Palantir, giving a time another 28 day, and I'll send this position to collect 20 cents for the Palantir. Hope this can be filled again, because now the current price, people are only willing to pay 19 cents. Okay, 19 cents. But now we are asking, we are negotiate the market for 20. Okay, now it's on par. So whether see any buyer, okay, to willing to take this offer for 20 cents. Okay, so it's about it. Okay, Colgate, we have opportunity for Colgate. Is really been going below to how many moving average. So moving average is, let's see. Okay, so Colgate, we can have an opportunity to trade Colgate. So you try Colgate over here to look at 1 week away. So probably we try 17, 85%, 70%. Okay, so this is about 36 cents. So what's the premium? We are looking at the ROI over here. So it will use up $259 for your buying power. So it means that you will lock your cash. Okay, so you will lock your cash in order to hold this position. So it will reduce 236 divided to 1/4. So this ROI should be about 17% of ROI for the next 28 days. Okay, so I guess this is also a good opportunity we can try to send this position. Okay, so send. So what we have here, okay, 36 still waiting. Okay. All right. So I'll record down in my Excel and I will send this record who won this. Right? So that's all. Thank you.